Hey, what's going on? This is Scott Taylor with San Diego Real Estate Hunter.com, licensed in the state of California for both real estate and mortgages with an emphasis on San Diego. So you're on my website, filled out a form, looking for information on FHA mortgages, and that's what this educational video is all about. Now, if you are looking to find what today's rate was, you can go to bankrate.com and you can find out what today's FHA mortgage rate is. But keep in mind, there's going to be an asterisk and a star, and it's going to say you need this credit score and this debt to income ratio and this purchase price and these guidelines and blah, blah, blah. And then guess what? That might not be your rate. So I like to do these educational videos so you have a better understanding what it is, if it makes sense for you, and how to get started. So let's talk about what an FHA mortgage is. So when you go to buy, and I'm licensed throughout California, but I like to focus on San Diego, and for this video, we'll focus on San Diego. So the great thing about an FHA mortgage is that you can buy with as little as 3.5% down. Now, the great thing with this is it's not just up until the conforming loan limit, which in San Diego it's 424,100. You could actually go up to the 649,750. So in theory, you could get a loan for 649,750, put down 3.5%, and then you get a purchase price, I don't know, probably around 675 or 680 or so, and you could buy with only 3.5% down. I mean, think about that. You could spend buy a place for $680,000 and put down 3.5%. That's what, I don't know, $21,000, $22,000, $23,000 down. That's it. And the great thing is we can even structure that to where we can include closing costs into your rate, and or we can ask the seller to pay your closing costs. So think about that. You can buy a home for something around $680,000, put down like $21,000 or $22,000 and have it structured correctly to where you don't even pay closing costs from that as well. I mean, it's pretty crazy stuff. Credit scores on that, it really varies. So something first about credit scores. I do Credit Karma and Credit Sesame as well. It's great to track your debts, not so much on credit scores. When we run it, the credit score is usually higher. For sure it's different. It's usually higher, so don't worry about that. Now for credit scores, of course, above 700's better, but you know, I have lenders that go as low as 600 on FHA, probably lower than that. I like to be consistent and stay in the middle with numbers that I give you. But your credit score, one of the great things about FHAs is that you can have a little bit lower credit score and be fine. Now, it might cost you a little bit on the rate and or on the back end, which is called like lender credits on that, but it's definitely possible. Something to keep in mind when we go FHA also is that it allows usually higher debt to income ratios. So conventional loans, a lot of times, you kind of stick to that 45 or 47% back end ratio to get approved. For FHA, I've seen as high as 56.99% max debt to income ratio. What that means is when we run your credit score or your credit report, we're gonna have those debts, right? We add up those debts plus your future mortgage payment, principal, interest, taxes, insurance, mortgage insurance premium, and if you have HOA. Add those together. Depending on your credit profile, I've seen as high as 56.99%. Assume for easy numbers you make $10,000 a month. That means that you could go up to $56.99 in total debt. I mean, that's awesome. I'm not saying you should. I'm not saying it's smart. I'm saying it's possible, right? Something to keep in mind with an FHA mortgage, okay, whether it's an FHA purchase, FHA streamline, FHA 203K, which is a construction, a regular FHA refi, and if I missed any FHAs, you pay what's called the UFMIP, the upfront mortgage insurance premium. As you're watching this video, it's 1.75%. And then each month you pay mortgage insurance premium, and really it depends on what the amount is and stuff, but it's probably something around 0.85%. So when I say upfront, it doesn't necessarily mean you have to put it out of pocket. It's worked into your loan, but you know, it's a little bit, let's be honest, it's a little bit. So if you're buying a place at $500,000, 500 times 1.75 is what? Something around $9,000 that you're worked into the loan, and then every month you pay that 0.85%. So that's something to keep in mind. These numbers that I'm giving you are for your primary home. So let's keep that in mind, whether you're buying a home, condo, or townhome. And as I say condo, there's something that I want to point out. If you're going with an FHA mortgage, your condo has to be FHA approved. okay? There's some lenders that don't, but that gets too confusing. So if you're buying a condo, just think it has to be FHA approved, and you can go to the HUD website. Really, you could go to Google, Google and say HUD website, FHA Approved Condo, San Diego, and go to the government site. All you do is put in the address, and it'll tell you which places in San Diego are. Okay, I want to keep this short, simple. This is about FHA loans. From here, let's say that you want to get started. Here's what you do. You go online and fill out my application at scottsloanapp.com. Takes you 20 minutes or less. It's stupid simple. From there, I get a text or email alert. I'll pull your credit. You don't pay for it, I do. You have no risk at this point whatsoever. There's no application fee, okay? So once I do that, I'll say, hey, based off your application, based off your credit report and debts, based off your credit score, we're looking pretty good to go FHA loan, right? I might even say let's do something else, but I'll say, hey, you are looking pretty good. Here's the documents that we're gonna need. I'll send it to you. It's things like driver's license, social security card, last 2 years tax returns and W-2s, last 4 months paychecks, last 2 months bank statements, all pages, latest statement of your 401k or IRA, depending on what your credit report says. It might be things like Chapter 7, Chapter 13, short sale, foreclosure paperwork, if you pay alimony or child support, or you got divorced, the divorce decree. Like, you get the idea. Depending on what your credit report says, we might need that. Once you upload it or send it to me via email, I and my team get working on it right away. We know exactly what we're gonna do. We're a broker, so we can take it to a lot of different wholesale lenders in the state where we have different programs. We're gonna take it to the best one based off of your credit profile. If it's a purchase, we're gonna open escrow, probably close within 30 days or less. And since this is a purchase, I'll stick with that. And it's pretty simple. So to simplify, go to scottsloanapp.com right now to get started. Thank you so much for watching, and I look forward to servicing you soon.